So, Royal Enfield is on an absolute tear right now. I mean, if you follow the automotive space at all, you've definitely felt the rumble. They've gone from this beloved Indian heritage brand to, well, a bona fide global powerhouse. But here's the thing, when you hit that kind of exponential growth, your biggest headache shifts from how do we sell this product to how on earth do we actually build enough of them? Today, we're doing a deep dive into Eicher Motors' massive manufacturing scale-up. We're going to look at the hard numbers, the strategic timelines, and honestly, the staggering scale of their upcoming expansion plan to see exactly how they plan to pull this off. All right, let's dive right into this. You know, the Royal Enfield Bullet 650 you're seeing here, it perfectly captures exactly what's driving this crazy, unprecedented global demand for the brand. Royal Enfield hasn't just entered the mid-size motorcycle segment, they've totally planted their flag and claimed it. We're talking about that absolute sweet spot of motorcycles, usually between 250cc and 750cc. It offers enough power for the highway, sure, but it remains accessible, it's affordable, and man, it is incredibly stylish for everyday riders. People everywhere, from London to Los Angeles to New Delhi, are just eating up this mix of retro aesthetics and modern reliability. But there is always a catch to this kind of rapid border-crossing success, right? When global demand skyrockets like this, your manufacturing infrastructure has to be incredibly robust to keep up because, well, you can't sell a bike you haven't built. And that brings us to a major piece of breaking news. So, on July 29th, 2026, the board of Eicher Motors, they're the parent company behind Royal Enfield, made a highly decisive, massive move. They officially greenlit a staggering 1,225 crore rupee investment into new manufacturing infrastructure. Now, in the automotive world, dropping over 1,000 crores, that is a huge declaration of intent. It literally screams to competitors and investors alike that the company is doubling down on its growth trajectory. But you might be wondering, where exactly is all this cash going, and why pull the trigger on this investment right now? Well, to figure out the urgency and the why behind the cash, we have to look closely at their current production realities. The core issue Royal Enfield is facing today is that they are rapidly approaching full utilization. Basically, they're maxing out their existing manufacturing capabilities. And in the manufacturing sector, full utilization is kind of this double-edged sword. On one hand, it's great. Your factories are running flawlessly, there's zero wasted downtime, and your product is flying off the shelves. It is an operator's dream. But on the flip side, when your facilities are literally bursting at the seams just to keep up with current orders, you hit a hard, concrete ceiling on your growth. If you run out of assembly lines, you literally cannot make enough bikes to satisfy that soaring global demand we just talked about. Growth stagnates, wait times creep up, and your customers might just walk over to the competition. We definitely don't want that. Let's actually map out their current footprint so you get a true sense of the scale here. Right now, Royal Enfield's manufacturing muscle is heavily concentrated in the southern Indian state of Tamil Nadu. They operate primarily out of two massive facilities, the Oragadam plant and the Vallam Vadagal plant. Put those together, and these highly optimized facilities give Royal Enfield a current production capacity of 15 lakh. That's 1.5 million motorcycles every single year. Just pause and think about that volume for a second. 1.5 million motorcycles rolling out the doors annually is a monumental logistical achievement. But as massive as that number is, it's the exact hard limit that they are quickly bumping up against. So, to fix this production bottleneck in the short term, Eicher Motors has a stepping stone planned. They need to bridge this gap, and fast. The plan is to boost that current 15 lakh capacity up to 20 lakh motorcycles by the 2028 financial year. But how do you just squeeze out an extra 500,000 bikes out the door so quickly? Well, they're using what the industry calls a brownfield expansion. If you're not familiar, a brownfield project just means a company is expanding, upgrading, or retrofitting an existing facility, rather than starting from absolute scratch. In this case, they're heavily expanding their existing Chennai facility in Tamil Nadu. Because the basic infrastructure, the permits, the supply chains, the whole shebang is already established there, it's a much faster way to ramp up production. By finishing this project, they'll push the combined output to around 20 lakh motorcycles annually. But the executive management knows even that impressive jump isn't going to cut it for their long-term global vision. Which brings us to their ultimate strategy, the greenfield solution, expanding into Andhra Pradesh. A greenfield project is the exact opposite of the brownfield expansion we just discussed. It means starting completely from scratch on empty, undeveloped land, allowing for absolute optimization from day one. And this brand new facility in Andhra Pradesh is the main target of that massive 1,225 crore investment we mentioned at the very beginning. Let's unpack the financial mechanics of this expansion real quick, because the details here tell us a lot about the actual health of the company. That 1,225 crore number we threw out, that's literally just for phase one. It's actually part of a much bigger 2,500 crore overarching plan they announced back in May. Building a factory of this magnitude is super complex, so they're executing this mammoth project in careful, strategic phases to, manage the risk. But here is the absolute kicker, and if you follow corporate finance, this should really catch your attention. This phase one expansion is being funded entirely through internal accruals. Yep, Eicher Motors is using its own generated profits, its own cash on hand to build this. They are not taking on outside debt to finance this specific phase. I mean, in a capital-intensive industry like automotive manufacturing, funding 1,000 crore plus expansion with your own cash, that is a massive flex of financial stability. Okay. So what exactly does a 1,225 crore internally funded investment actually buy you in the real world? Well, it buys you an additional 4.5 lakh motorcycles in annual production capacity at full utilization. This specific Phase I injection of manufacturing volume in Andhra Pradesh is purely designed to make sure they don't hit a wall as global sales keep scaling. Let's put that 4.5 lakh extra bikes a year into perspective with some quick math. If a factory runs roughly around the clock for most of the year, adding 4.5 lakh units essentially means a brand new Royal Enfield is rolling off the assembly line about every 60 seconds. Literally, a bike a minute. And that is purely on top of their already massive baseline production. It is just a staggering leap in sheer manufacturing velocity. When you lay all of this out on a chronological roadmap, it looks less like a standard corporate timeline and way more like an aggressive master plan for market domination. Look at this. Today, they are hitting that 15 lakh limit down in Tamil Nadu. The pressure is absolutely on. But fast forward just a bit to FY 2028, and that Chayar Brownfield project is expected to be wrapped up, temporarily lifting the production ceiling to give them some much-needed breathing room. Then comes the major milestone, FY 2030. That is the target date for when this brand new Andhra Pradesh Phase 1 facility is fully completed and operational. It is an incredibly tight window, right? Moving from capped production to launching both brownfield and greenfield operations within just a few years? That is a step-by-step masterclass in high-stakes capacity planning. Looking at their total growth trajectory on a chart really drives the sheer scale of this home. So we start at our baseline here, 15 lakh motorcycles today. By FY 2028, boom, that jumps to 20 lakh. And then once phase one of the new Andhra Pradesh plant goes totally live, they hit a staggering total capacity of around 24.5 lakh motorcycles every single year by FY 2030. They are effectively aiming to boost their total manufacturing output by nearly 2/3. In an industry where growth is usually, measured in single digits, scaling your production capacity by over 60% in just a handful of years, that is an incredibly bold, aggressive maneuver that's going to completely reshape their supply chain capabilities. So, why pour thousands of crores into all this new concrete, steel, and robotics? Well, it's about a dual impact. First off, it's absolutely crucial to meet the continually rising domestic demand right here in India, which obviously remains their bedrock market. But it goes way beyond their home turf. This capacity is heavily tied to their global ambitions. They need this immense volume to aggressively expand their international presence. Plus, having a new state-of-the-art factory means they can actually broaden their mid-size motorcycle portfolio. We're talking entirely new models, new engine configurations, variations totally customized for different global markets. As Eicher Motors put it in their regulatory filings, this whole master plan is about ensuring the company's readiness for long-term growth opportunities. They want the infrastructure fully in place, tested and humming along long before global demand outpaces what they can actually deliver. Which leaves us with a really fascinating final question to ponder. With a projected massive capacity of 24.5 lakh bikes rolling off the assembly lines every single year, is Royal Enfield poised to completely dominate the global mid-size market? Honestly, they clearly have the heritage, the styling, and the exact product lineup that riders everywhere are craving right now. And now, with this bold, multi-phased expansion into Andhra Pradesh, they're making sure they have the sheer industrial muscle to deliver those bikes to every corner of the globe. It's a remarkably aggressive strategy, and for sure, it is going to be incredibly exciting to watch it unfold over the coming years. Thanks so much for joining me for this deep dive into Royal Enfield's master plan. Stay curious, and we'll catch you in the next explainer.